S&P 3,400. What do you think about that level?
I think you probably know where I'm about to go with that. The fundamentals don't justify it for the most part, but this is really mostly a composition issue. The S&P, when we talk about the S&P and S&P performance, it really is about a handful of stocks that have outperformed. The vast majority of stocks have been in a bear market. Some of them, some indices, some sectors in a bear market since mid-2018. When you look at the NYSE composite, when you look at the Russell, both of those are down, 5% and 11.5% respectively. So the S&P really is its own animal, and it's difficult to discuss it really with broad brushstrokes because of the composition issue.
So if you don't like stocks, Peter, then what are you recommending at this point?
Yeah, I've been bullish of gold for some time, really since late last year, and that has played out reasonably well. I still do like that trade. In the currency space, I'd like being long the dollar here. I think we are going to risk off. In fact, I have a lot of conviction that right now we are so excessively overbought and overvalued that the dollar will catch a bid when U.S. equity markets correct, as odd as that may sound. So not particularly constructive on equities. I do like investment-grade credit. I think it's safe. It's going to have Fed support for some time, but you're not going to get a heck of a lot of yield out of it at this point, albeit I did like it when it was trading quite a bit wider as well.
Anastasia, does gold have a big position in your clients' portfolios?
I think gold is definitely a relevant conversation to have. I think it is around fair value at these levels. But one of the things we have to watch is what the Fed does in terms of inflation, and can they actually be credible in getting inflation to come back up? To the extent that inflation break-evens start to rise higher, but nominal rates do not, you could actually get a further fall in real yields, or at least they stagnate around these current levels, in which case I think gold can do well. And of course, it is a hedge against some of the unforeseen things. But I would say equities do have quite a bit of value to us, and the Fed is scheduled to meet tomorrow. What they have done is inserted a significant, massive amount of accommodation into the financial system, and they support the equity valuations. If you look at the earnings yield of some of the companies that we're talking about and the earnings growth rates, they're so far in excess with anything that could be earned in the Treasury market. So I think that's going to continue to support equities. It's going to provide the bid, and those valuations are going to continue to be supported. So very much in favor of equities. And, to the point of the S&P, you got to break it down, and you got to look at some of the specific themes. When I look at biotech, when I look at clean energy, when I look at tech, there's so much growth potential there.